I want to talk to you about something very, very important today. Do you know what the highest income tax bracket is that we've ever had in the United States? Federal income tax bracket. It's actually 94% in 1946. Do you know what the highest income tax bracket is today? It's 37%. Now, at the end of 2025, our income taxes are going up. The highest income tax bracket goes to 39.6, but all of them are going up. And the reason is the Tax Cuts and Jobs Act is expiring, the one that was put in force in 2018. So we're going back to the 2017 rules. But here's what we've got to be aware of. Not only do we have this guaranteed tax increase at the end of 2025, we also have a $34 trillion debt. And what happens in the future? How do we pay for all this stuff? What is the likelihood that 5 or 10 years from now, income taxes may be substantially higher? Now, we don't know for sure. What we do know is they're going up at the end of 2025. What we also know is that in retirement, you have some control of your income taxes. Now, you're not going to have earned income, right? You're going to have things like, well, Social Security income, up to 85% of it is taxed as ordinary income, depending on your other income sources. You know, you'll have investment income. You'll have distributions from retirement accounts. Now, if you withdraw money from the bank, that's not a taxable event. So some of your money you spend, you're not taxed on. So we can be very smart about this in what I call the sweet spot between retirement age and age 73. 73 is when we have to start taking those required minimum distributions from our retirement account, and we're going to be taxed. And it's about 4%. It's a little less, but just figure 4%, it's easy math. So you're going to give up a lot of control of your taxes because at 73, you're going to have forced taxation. But what we want to think about is, let's look at where tax rates are now. We know they're going up at the end of 2025. They may go up even more. So when you're in that sweet spot between retirement age and 73, you have an opportunity to keep your tax bracket really low in many cases. That could affect your Social Security election. It could affect how you draw investment gains for income. But you're in control of that, so you can be very intentional. And if you keep your tax bracket low, you now have more opportunities to do things like convert traditional IRA to Roth, where you're doing it at a lower tax bracket today, so that in the future, if tax brackets are a lot higher, you've got tax-free income. Or maybe it's realizing capital gains. You know, capital gains tax is one of the best things the Congress has given to us in the Internal Revenue Code. We are incentivized to earn money through long-term capital gains. So we have a great deal of control. And in retirement, it becomes critically important. You know, it's about your net return. It's how much you make minus your tax bill is what you get to keep. And if you can minimize that income tax bill, that is more income for you, which can create more stability in the long term.